LiteFinance, the world of financial freedom.
Hello guys, it's a Monday, 7th of November, and it is time to start the market forecast. So after the FOMC meeting, the Fed's position became clear. But what about the rest of the regulators? They are faced with a difficult choice, which will affect their currencies. So we will discuss fundamentals and make a trading plan for Euro-USD. But first, as always, we need to check what's on the macro calendar. And we must say that the first part of the week lacks some important macro data publications. But this can be also a good thing, because the market should be more predictable and move more technically, which means it should be easier to decide where to place trades and in which direction. So, on Monday we have some data from the UK, Eurozone and Japan in the evening, along with the meeting of the Eurogroup. On Tuesday we will get a few central bank officials from the ECB, SNB and BOE speaking. On Wednesday, again, and this time from FOMC, ECB and Bank of England members will hold a speech, and finally some key data will be published, which are going to be crude oil inventories, which will be interesting since we got a recent output cut from OPEC, and EIA oil reserves should stop flowing into the market in November, so we will start seeing how current demand will affect the supply and what will happen to the price afterwards, of course. Next, on Thursday, we will get some juicy stuff, namely the US CPI report for the month of October. Also, what is worth mentioning, Baker Hughes oil rig count will be published that day, not on Friday, which is another thing we need to keep watching, since we saw recently that the number of new oil rigs has stopped increasing, so combination of those factors will surely affect the oil price, which is steadily increasing since the OPEC decision. Finally, on Friday, we will get UK's GDP data, which also gives us another indication how the Great Britain economy is doing. Pound was gaining momentum recently, and even after the FOMC it held the ground and even regained at least half of the previously lost value against the US dollar. So now, let's move on to the topic of the video, which are central banks. And so, the pack leader intends to raise the rate to 5.15% after the November FOMC meeting, as the futures market expects. But what should do the rest of the pack? Should they continue the race at the risk of triggering recessions, or should they stop and not fight inflation? Christine Lagarde was the first to answer this question. According to her, the ECB does not believe that the upcoming recession in the Eurozone will curb inflation. It looks like the ECB is ready to continue raising rates, which temporarily supported Euro-USD. But it is unlikely that the intention of the European regulator to continue to follow the pack leader will save the euro. So according to BNP Paribas, the maximum Fed rate will be 5.25%, TD Securities forecasts 5.5%, while Nomura expects the rate at 5.75%. And so the mix of high borrowing costs and increased demand for safe haven assets will continue to strengthen the greenback. So while currencies with negative current account balances like GBP or NZD, or housing bubbles or over-indebtedness in large financial sectors like the CAD or AUD will be under pressure. So now, as for Euro-USD, we should notice that the energy crisis terrorizing the euro is a common phenomenon for most of European countries. The EIA, the International Energy Agency, estimates that Europe could face a shortage of 30 billion cubic meters of gas next summer, which could trigger several recessions. Although everybody was saying that they won't last the winter, and currently the storages in Europe are full, so we need to be cautious with such predictions. Nevertheless, the situation is far from good, and the sentiment on the market surely remains. So the Euro-USD downtrend will maintain for a long time. And so Friday US employment data for October were strong, better than expected, but still worse than previous reading, and euro regained the loss after the FOMC. But it is a great opportunity for us, because it allows traders to add up to short trades towards 0.97 and 0.95 targets. Okay, that would be all for this video. Thank you for watching, and till next time, guys.